Thanks for joining us today. I really appreciate it. My name's Jerry Rollins, and this is the SAGE Executive Group education event. We have 8 of these this year planned. Our next one is May 17th, and it's going to be all about new tax laws and how they affect you both personally and in business. So I think it'll be very interesting. We'll send information out right away. So first of all, I'd like to thank the people that underwrite this, which is I know I saw Charlotte from McKinney Advisory Group in the back, Andina Family Offices, so we have 2 representatives here from Andina, and Silvergate Bank, we have 3 people here from Silvergate Bank, 4 people, one of our panelists. RG Alliance, I saw we had some folks from RG. The partners from Peer Cap Partners are both here, Zahir and Ashish. And EcoCaters. From EcoCaters, can you tell us the name of your new business lunch, please?
Simply Lunch.
Simply Lunch. So many of the people who attend SAGE meetings, they get their lunches now. It's healthy, it's environmentally friendly. I think were they bamboo plates they were delivered on? No animals were hurt? I'm just kidding. I think some were. So, oops. I apologize to all my vegan friends. So special thanks also to Corporate Alliance, which is hosting this event, and Troy Romero, who's the managing partner of Romero Parts, is also co-owner of Corporate Alliance, and he has an event he wants to invite you to. Troy?
Thank you. Well, thanks everybody for coming. I don't know how many of you are here for the first time. I know if you're a SAGE person, you've probably been to Corporate Alliance several times. But we hope you enjoy our new space. We are having an open house tonight from 4 to 7 p.m. You are welcome to attend sharp and pay it forward or underwriting it, so there's no cost. There's good food and apparently good beverages of the adult variety, they say. We have over 200 people RSVP'd, so a lot of top-notch business leaders, and we would love to have you come and enjoy the evening. Or just drop by, whichever you'd like. And we appreciate you being here, and especially we appreciate our relationship with SAGE. Been a member for a number of years, and it's an awesome organization. So thanks for coming.
Thank you, Troy. So explain the format today. So first I want to introduce our panelists, our honored, very special panelists today. So on my left, Stefan Goss, who is, his day job is Zito Media. But then he decided to start another company called Sovereign Capital. And I'm going to have each of them do kind of a 2-minute who we are and what we do in just a moment. Then there's Eric Barlow, founding partner of Andina Family Offices, and I'm going to have him explain as well. And then it's Christopher Musa from Crypto Capital Investments. Christopher. And on the end we have Charlie, not Charlize. He's not Charlize Theron, even though we have it on his badges up. Charlie Plummer from Silvergate Bank. So we tried to bring a diverse group of people to talk to you about these questions. So we're first going to have them do a 2-minute introduction each. Then I've got prepared questions, which I got from our members and panelists. And then we're going to open it up to the crowd, okay? We commit to have you out of here at 10 o'clock, not 10:01, but 10 o'clock, okay? At latest. So first of all, Stefan, tell them who you are and what you do.
So yeah, I'm Stefan. I'm currently building an actual currency in the crypto space. So I'm not a fund. I'm not doing anything that side. I decided that we had a large need for a stable currency, kind of like Tether, just legit. I feel like that is going to massively implode, and so I wanted to be in a position to take over when that happens. So what I'm building is literally just a currency that is backed by gold. So it's a very, very simple concept on the top of it. Turns out the hard part is actually making that regulatory proof. So I've spent the last 9 months with regulators. I was meeting with the commissioner of the CFTC, so we've got some really interesting meetings on that side, and building kind of the economic system that underlies the currency I'm building. And so it's really, unlike traditional crypto, the supply is not fixed, right? We can issue more coins by buying more gold and putting it into a vault in Switzerland. It's all physical gold. It's in a vault in Switzerland, and so it's been a fun thing to set up. My day job is I run a marketing monetization tech company, so we have about 80 employees there, and so this came out of me looking into ICOs as a fundraising mechanism and deciding that I felt, and that was about 18 months ago, I decided it was just kind of too sketchy still to really risk my companies on that. And now I think it's changed a lot, but I'm still a bit skeptical in a lot of it, on a lot of things.
Hi, Eric Barlow, Andina Family Offices. We're one of the only multifamily offices in San Diego, actually. And we specialize in a couple of areas. Our families, we manage about 20 families. All the net worths are 20 million plus, most of them up close to 100 million plus. And then we also help business owners prepare and get ready for exits. We've specialized in this area all the way up through, I was just telling someone in the last 5 months, we've helped about $250 to $300 million worth of business exits with different companies. So we've really specialized, and the cool thing is one of the ones families we just helped through for 180 million, there's actually 2 partners in that, and they're both our clients, 0 estate taxes, because they got us in early. We did really great planning for them. So the earlier we can get in with business owners, the better, because we can really help them structure, get things set up right. And then on the back side, we're not your traditional ho-hum stock bond shop like everybody else. We have a full-fledged private equity division where we have offices in New York, LA. Our LA office has a lot of ties in the Silicon Valley, so we're seeing deal flow from all of those major business centers. So we're seeing, and plus people just know we have a lot of money to invest right now, so we're seeing tons of deal flow, very interesting stuff. Private real estate, we've had some massive exits for our clients just over these last, anybody who's been in real estate knows what a blessing that's been in the last few years if you started buying kind of in the 09, 10 area. Had a lot of really great exits and have a full real estate team looking for private real estate opportunities throughout the country. And then on the traditional side, we're just all about dampening volatility. How I'm here on this panel today is through our private equity firm. We invested in Ripple, the company, not XRP. We didn't even know about XRP when we invested in Ripple. We invested in Ripple because of the technology and how disruptive we saw that it was going to be to the wire transfer industry. And so we got in early on the caps table on Ripple, so needless to say, our clients are pretty happy about that one. So that's us.
Thank you. Now, Christopher Musa.
Yes, I am from Crypto Capital Investments. We are a cryptocurrency hedge fund that is located in San Diego, and we just launched this month. We invest in cryptocurrencies through multiple avenues. We have a diversified portfolio. We invest in ICOs. We also have an algorithmic trading department, which we also trade with, and we do technical analysis trading. So we have invested in this space personally for many years. When I first heard of cryptocurrencies and Bitcoin, it was back in 2012 when there were no exchanges online and you had to arrange an appointment with somebody randomly on the internet and purchase it from them. At the time, Bitcoin was $5, and throughout the years, exchanges came online, and now we've seen these run-ups throughout the years. So we are very excited to launch and to be here today.
Thank you. Now, Charlie.
My name is Charlie Plummer. I'm in the FinTech initiative with Silvergate Bank. Silvergate Bank is providing basic banking services to the cryptocurrency affiliated companies out there. Silvergate's been in the space since 2013. Like a lot of people, we got interested in the technology. From there, we went and started meeting with teams in the space. And first off, we were blown away by the caliber of the teams we were meeting with. And then the second thing is we realized all of them were getting their bank accounts shut down. So from our perspective, back then, we saw a real business need. And we basically realized if we could go to our regulators, the Federal Reserve Bank out of San Francisco, and just explain what Bitcoin is and create a program around banking cryptocurrency affiliated companies, that we could help an underserved market. So that was back in 2013. Today, we have about 200 clients in the space. And our clients are a mix of digital currency exchanges, institutional investors, and software developers.
Charlie, your partner at Silvergate Bank that works with you in that division is where today?
He's actually in Washington, D.C., meeting with some federal regulators.
So it's really interesting to have a local regional bank that's so instrumental in this industry. So thanks for working with us today. So what we tried to bring was a diverse group to this meeting so you could get a real insight. So I'm going to start with the prepared questions, and hopefully they're not too softball. So, Stefan, I'm going to start with you. How would you explain Bitcoin and cryptocurrencies to a general audience? So pretend you're explaining it to Jerry.
I got the easy question. Okay, so I think the key concept to understand is that there's a huge difference between the cryptocurrencies use blockchain technology. The underlying infrastructure is blockchain. One of the applications of the blockchain is a cryptocurrency. So to understand crypto, you really have to understand the underlying thing. Think about it like everybody here has a server somewhere that stores your data, right? Blockchain is effectively just that, but instead of having a centralized server that is owned by somebody, there's a whole bunch of different mechanisms, and that's how mining, et cetera, play into this. But there's a bunch of mechanisms that let you distribute the entire ledger and the entire database across all the client computers. Now, the benefit of that is that everybody can add to it, everybody can take away from it, it gets validated by the network, and then everybody can trust all the transactions. So really the concept is to decentralize the trust that is required so that instead of having to have a bank that says, hey, yes, Stefan has $100 in his bank account, so I don't have to call the bank anymore, I can just look at the actual database. So that really is the huge innovation. Now, currency is an amazing application for that, simply because if everybody knows who else has how much money, then you don't need a bank that tells you, hey, yes, you can trust this person, this check is good. So it effectively eliminates all that need for trust. That's why cryptocurrency has grown so quickly. And one of the starting points really was into more like anonymous transactions, and that's shifted a lot since then. But that was one of the major issues, right? Because if you can't go to a bank and say, hey, I would like this account to deal drugs. But in cryptocurrency, you can verify that the other person actually has money and trust that money without actually having to go to a bank. And so that's really how everything got started. And now, I mean, it's moved far away from that. I think a very small percentage of transactions are illicit now. But that's helpful.
Excellent.
I don't know if anybody else wants to weigh in.
Does anybody else have any additional information to add? So any of the panel can always add.
Was that clear to everyone, or are there still questions?
You might want to explain the central ledger further,
So,
we understand it.
I think very simply, just to know the overall concept of it, any of us today right now could send money anywhere around the world, and you could send it at any time, and it will get there within a few minutes or even a few seconds. And this is 24/7, 365 days a year. And it will go through for a very nominal fee, and there's no third party that it needs to go through to have that transaction, validated, and to know and trust that it will get to the other side of the world or wherever you're sending that money to. I think just that concept in itself, for everybody here who runs businesses and has dealt with banks and financial institutions, know that that really is a big step forward in the infrastructure that is set up around the world. So just having that ability to send money anywhere around the world and have it be there in a few minutes or a few seconds for a nominal fee is one of the use cases, like Stefan was saying, of cryptocurrencies on this blockchain technology. And I think just getting that first foot into the door will lead you into the distributed ledger and the databases that can be validated around the world.
Good.
Just real quick.
Sure. Yes.
Yeah, I think this is a really good example, and because you got to realize that the money, using this particular case, transferring money around the world is still being done through SWIFT, right? And it's like 1970 technology. It's ridiculously slow and inefficient. To send money to Europe or to established countries, it takes 3 to 5 days. To send to an emerging market, it's 8 to 10 days, and it has a 12% failure rate. It's ridiculous. By utilizing this technology, you move it to 4 seconds or less with 100% accuracy, and you remove fraud from the picture. Imagine. So that's just one little industry. You apply this across the world and all the different ways it can disrupt. It's a little bit mind-boggling, honestly.
Thank you, Eric.
Yeah.
Charlie, what gives these cryptocurrencies value?
Yeah, I think that's a really hard question. I mean, so what we were just talking about was cryptocurrency is money, right? And so when you look at the amount of money supply and the amount of, there's a finite number of Bitcoins that are ever going to be issued. So you can try and look at it that way. A lot of people relate Bitcoin to digital gold. The gold market is $8 trillion. Bitcoin market cap is around 100 billion. So there's huge growth potential there. And then when you start looking at the other cryptocurrencies and things that they call utility tokens, now we're talking about things that you create a platform, say Sage, right? And then you can distribute Sage coins so that everybody in order to get in here needs a Sage coin. Now you're creating kind of a marketplace, or there's a reason to hold that Sage coin and you need to use it in order to get into the room. So the real question though is, what is the underlying value of cryptocurrencies? Well, there's utility tokens, and then there's, if they're going to replace money, there's the money supply. So it's incredibly hard to value these things, and I think that's part of the reason for the volatility.
Good. Charlie, or no, Christopher, what is an ICO? I still don't know what an ICO is, so if many of you already know, what's an ICO and how does it work?
So an ICO stands for initial coin offering, and it's similar to the IPOs in the stock market. But basically, it is the initial sale and launch of a new blockchain technology or a cryptocurrency. So these happen through what started as public sales to anybody who wanted to invest in a new cryptocurrency or blockchain technology. People could buy in just as if a venture capitalist is investing in a new startup, or investors are investing in an IPO in the stock market. So the ICO is basically the launch and distribution and sale of a new cryptocurrency or blockchain technology.
Thank you. Eric, I've met you several times, and my perception of you is, like myself, you're a conservative guy. Would you say that's a fair statement?
That's a very fair statement.
So when you told me I was an early investor in this, I was shocked. So tell me why.
Well, you know, many of you who have, I mean, another good example of why is, if you're going to invest in biotech, it's a very complicated area to invest in, right? You have a lot of FDA, you have a lot of regulations, you have a lot of things. The way I've always invested in biotech is through the picks and shovels, right? And that is getting to the underlying equipment that has to be utilized to execute the research and all the studies being done on the particular things. The same thing is how we're participating in the crypto world through Ripple. And like I mentioned, we invested in Ripple before we even knew about XRP. It was not, the crypto was not what drove us to invest in it. What drove us to invest in it through our due diligence was their technology in solving a very significant problem and a very expensive problem with a very disruptive technology. And isn't that what all of us want to invest in technology for? We want to find disruptive ways to change an industry. And I can give you lots of examples of that, but we don't have time for that. So when we went into the crypto space, we did it purely because of technology and what that technology was bringing to the table. The crypto part of this just ends up being the solution to help cap off the technology.
Stefan, what is the broadest impact of these technologies over time?
So I think one of the really interesting things here is, like, if you think about where databases are used, that's where there's going to be impact, which is pretty much everywhere, right? So I think we will see first the currencies, I think will be a huge use case just because they're much easier to implement. But even just, for example, think about logistics, right? If you have a vendor that is selling you something, that can all be tracked via the blockchain. And then it can be paid for via other cryptocurrencies. So it's really hard to see where it goes right now. I think for one of the tricky parts at this point is things are still very nascent. On the ICO side, the currencies have been reasonably well established. You can now buy things with Bitcoin. On the ICO side, we haven't really seen many implementation that have actually blown up, right? There's been very few that have been truly running at this point. So at least for me, it's incredibly hard to forecast where the impact is going to lie. But just the ability on just the computing ability of decentralizing all of these things, if you're in an intermediary business, this is going to be a problem for you. So if you are a bank, this is, and again, so you can either capitalize on it or it's going to be a problem for you, because banks, like if you're in the business of providing trust as an intermediary, it is entirely possible that blockchain will just completely replace your business because there's no more need for that, right? If you can decentralize the ledger and everybody can just check the trust themselves, then that's where it's going to have the largest impacts. And so that's, I think, and I don't know, good examples of, like, for example, real estate, right? Titles. Like, the only reason we have title companies and title searches is because the whole system is a huge mess. If everything put onto blockchain, no, I mean, it takes forever. It's hard to say. Even if you do a search, you still don't really know if there's anything like lingering. It's super expensive, takes forever. Versus if you just put it on the blockchain, like the entire title company industry just goes away. Now that's going to be a long process, right? There's a lot of really entrenched interests, but that's, I think, where we'll see a lot of movement is to get rid of a lot of those intermediaries. The processes are going to become much more efficient, and if you are the person replacing them, you're probably in a very good position to make a lot of money. But if you're on the other end, it's probably a good time to start thinking about how is this tech going to impact you.
Thank you, Stefan.
Could I add something there?
Yes, please.
Sure. So I think it's also important to note that these cryptocurrencies and these blockchain technologies are global. They're not US, they're not just strictly operating in the US. They are not centralized to any company or individuals. They are global, and the impact is going to be seen globally as well. So there are billions around the world who do not have access to a bank account. And what these cryptocurrencies do is, for the first time, they are able to have a bank account right on their phone, and they are able to now transact with people anywhere in the world. And there are also countries whose local currencies and national currencies have failed them through hyperinflation, and we're seeing that right now in Venezuela and other places around the world. This is now a global currency that is not centralized to any one nation, and what these cryptocurrencies and blockchain technologies are doing is giving them a way out to when they didn't have that option in the past.
I think the aspect too of just the global government aspect is really interesting because, and this is kind of more 50 years out speculation, but if governments actually lose the ability to issue currencies themselves because everybody just stops accepting them, right? Everybody says, hey, I'd rather have Bitcoin instead of US dollars. And again, that's a much more longer term thing, but just the impact on governing and how countries are run will be pretty immense if we ever get there. Now the question is, do they start trying to crush it so that they avoid that from happening? But if this really, especially in a lot of third world nations, I think we'll see a lot of adoption really quick. Because, I mean, that's like if you go to Argentina, like everything is US dollars because nobody wants the local currency. So I think we'll start seeing a lot of that, which is going to have huge impact on those governments being able to effectively run just because nobody's going to give them debt anymore and nobody's going to accept their currency. So that'll, I think, that's a very good point on just the global level.
So Christopher, you're next. Is this a bubble? And do you have an idea of where, if it is a bubble, where are we in this cycle?
An easy question.
And by the way, we're recording this and putting it on national news tonight.
So for anybody who, became familiar with cryptocurrencies in the last few months, it obviously looks like a bubble because it's corrected over 50%. But if you look at the last 15 months, we've seen a similar cycle in Bitcoin and the cryptocurrency market 4 times. So we saw a run up of 50 to 100%, and then a correction of close to 30 or 40%. So just in the last 15 months, we've seen that cycle play out 4 times, in addition to the last one. In 2013, we saw a similar cycle where it went up 10 times and then corrected almost 90%. So in cryptocurrencies, this is basically a cycle that happens, but it happens on a shorter time frame. But we've also seen these corrections happen in the NASDAQ and in the Dow Jones in the last 20 years. So this is not something that is unique just to cryptocurrencies. We've seen this in our traditional markets. But I think it is important to note that when you look at the market cap of cryptocurrencies and Bitcoin in particular, just like Charles said, it is just a couple $100 billion to a few $100 billion total in cryptocurrencies. The market cap of gold, like he said, is $8 trillion. The market cap of the stock markets is over 60 trillion. So are we in a bubble? I mean, when you compare it to global markets and the potential value and long-term value of these cryptocurrencies and blockchain technologies, it seems like we're just beginning, even if we are seeing these big corrections in a short period of time.
Thank you.
Can I add one thing?
Please, Eric.
Yeah, so I agree with all that, but I also want to add that when you hear about people maxing out credit cards, taking home equity loans, and taking it and buying anything like this in very aggressive, risky investments, you have somewhat of a bubble, right? And eventually, things have to return to fundamentals. You have to be able to determine and drive fundamentals to whatever asset you're talking about. And we're starting to see some of that in crypto. We're starting to see an exchange of value happening with Bitcoin and others where you can actually use it to go buy things. But eventually things have to return to fundamental values and what's driving those fundamental values.
So true story. So my wife she had no knowledge of cryptocurrencies, didn't care about cryptocurrencies, and about 4 months ago, she came in from outside early in the morning, and she said, Jerry, what are cryptocurrencies? And I said, let me call Stefan and have him explain it to you, because really they go over my head. But I've heard Stefan and Lawrence, all my friends talking about it. And I said, why do you ask? She said, well, our pool man's leaving. And I said, why? And she said, oh, he made $2 million in cryptocurrency, so he's quitting. So, true story. True story. Can't make up that story,
Did he
right?
monetize it, or was it
He
just
monetized
he
it.
monetized it?
Thank God he monetized it. So, the good news is he's got a nice house now.
Well, and I just might add to that, thank goodness for all those people maxing out their credit cards and taking home equity loans, because they provided liquidity for all these people who got in early and now needed a way out.
So Charlie, we're going to do the governance issue. So what's your view of regulation and the possibility of SEC involvement, since your bank is so involved in that?
Yeah, so I think that the SEC has actually been really on the ball. I think that the way they're approaching it, from my opinion, what they're going to do is they're going to say, hey, this is a security. So if you try and issue this to the general public, we're going to go after you, and they're going to build that case, right? And then what they're going to do is they're going to, in my opinion, go to the exchanges, the biggest ones. There's a lot of exchanges, a lot of big ones based in the U.S., and they're going to say, if you are selling what we have shown you to be a security, you're you're helping sell unregulated securities, and they're going to use the exchanges to stop the flow, or to try and stop the flow of some of what they consider to be unregulated securities. And that's a lot with what they did with what FinCEN, another government regulator, did with money laundering. So they understand that the on-ramps, the exchanges, the cryptocurrency exchanges, is the ones that you can enforce the rules on. And so that's where I think their focus is going to be. But first they have to set up the case on what is a security when it comes to crypto, and make it clear so that the exchanges know not to list things that are construed as unregulated securities.
Yep.
I was just to say, so what does that do to the supply and demand during that period of time?
I mean, it creates huge volatility, right? Especially if you have, for instance, one of the biggest exchanges, Bittrex, just delisted 82 of their currencies, most likely because they understand where the SEC is going, and they don't want to be in the crosshairs of the SEC. And now, I'm sure if the investors who are running the cryptocurrency hedge funds can look at what happened to those 82 currencies, and they probably dropped 50% overnight. And when it's known that when a smaller cryptocurrency, like when I think Litecoin got put onto Coinbase, it went up 50% overnight. So this is, it's supply and demand and access, right?
Yeah, because you got to realize, right, there's hurdles that are set up. $1 million is an accredited investor. You have to have $1 million of investable assets. 2 million makes you a qualified client. And so where is the SEC going to draw the lines? I bet it's going to be qualified clients. So you think about all the people that are going to be wiped out of that investment opportunity. When that happens, it's very interesting to think about.
And on Eric's point, actually, what we're seeing from some of the best tech teams that we get to talk to, we're seeing that they're going the accredited investor route. They're raising now from only accredited investors, and what they're going to do is they're going to raise, $50 million, enough money to build the platform, and then they'll issue a cryptocurrency to the public once there's clear indications that there's actual utility in that cryptocurrency.
And the good news is our members, our SAGE members that have gotten involved in this field have utilized one of our law firms and other law firms, Romero Park and others, to make sure that this is all appropriate going forward. So Eric, if I've got $10 million of investable money, what's a smart allocation of my portfolio to commit to ICOs or cryptocurrencies?
So, there is a place for it, all right? But let me make a couple of comments. Number one, it's going to be very small, 1 to 3%, I would say, would go to crypto. This is highly risky investing with a lot of volatility. But my advice would be to anybody in this room would be the same as anything else, and that is if you're going to do it, there's some real experts in this room that are already setting up funds. It's worth their fees to have them manage it for you because it's very complicated. How many of you are going to be able to leave here today, go home, and talk to whoever's there and explain to them what a cryptocurrency is and do it so they understand it? Not many. And you could actually do a lot of reading on this and you'll still be kind of scratching your head on a lot of it, honestly. So I would say a very small allocation and you do it with kind of your high risk capital.
I think one of the points to add to that, so the hard part right now to figure out these ICOs is figuring out, are they actually legal, right? So the whole securities, and by the way, I am a big proponent of more regulation because I think it's such a mess right now. There's so much shady stuff going on and people just stealing money. So I'm for the SEC actually coming in and cleaning that stuff out. Now, the question is, do they overreact? But now on the ICOs especially, it is so hard to figure out, did this company actually commit securities fraud, right? And you don't want to invest in the company that did. So I think to the point of like using fund managers to really understand and look at that like in-depth level of, is this an actual legit company? I would not just buy the top 10 because like even just until recently, one of the top 10 was just straight up a pyramid scheme fraud. And everybody knew it, but it just kind of held up until it didn't. And so don't, like the whole index strategy doesn't really work yet just because there's so much bad stuff in there.
Yeah, and I just might add to that, I look at the due diligence we do on managers, we have like a six-step grueling process. We put hedge fund managers through and other managers. Unless you have that kind of system in place and you know how to do it, then I'd say go for it. Go figure it out. But otherwise, hire some people that do have it in place and have a lot of experience in this space, would be my suggestion.
So I have a question. By show of hands in the room, how many of you have invested in cryptocurrency in any way, shape, or form?
Bag holders.
Isn't that interesting? And I assume all of you, hopefully all of you up here.
I'm not.
Not. So Stefan has it. So Stefan, I'm going to ask you the next question. You can answer that first.
Sure.
So why not?
So two things. A, I believe in building companies. I'm not an investor. It makes me too nervous having to look at it every day. And I'm going to look at it every day, so I'd just rather not. And so for me, and again, obviously the huge question is, are you in an ARB hedge fund, right? Are you in a long strategy hedge fund? So there's so many different questions around that. And so to me, I would invest if I could, I don't think most of the currencies we're currently seeing, I would say out of the top 10 currently, maybe one is still around in 10 years. Because the problem is, one of the major issues is once you've launched your blockchain, changing it is incredibly hard. And so what I believe is going to happen is there's going to be a lot of fast followers that are going to launch technically superior blockchains that will start gaining traction over the next 10 years. And so for me, I'm skeptical on can you have a 10-year investing strategy in crypto right now? I think if you go into equity companies, that's completely different. But if it is listed to me, it's just, I don't know, that's for mine. And I just don't want to see, I don't day trade. And I know that if I buy, then I will, and then it's going to be even more annoying. So that's
Thank you. So Christopher, how do you weed through the incredible amount of information on ICOs?
Yeah, it's challenging just in general in the landscape. It's a 24/7 market. It trades 365 days a year, and there are exchanges all over the world. So there's a lot of information and things happening continuously. In terms of ICOs, we're very happy with the team that we've built. Recently, we have an investment strategist by the name of Luke Martin, and we also have Chris Groshong. We have a couple advisors who have been in this space for a long time. They've amassed online followings, and they are talking directly with the teams that we are looking to invest in. So I think that's one of the most important things, is to talk directly with these projects, with these teams, to see their roadmap, what they're building. You know, there's a lot of things that you could put on the internet in terms of marketing materials, and you know, these projects are very good at marketing. They invest a lot of time and money into it. But to really get past that marketing and to see what is a real project and a promising project versus what is something that is closer to a scam or a fraud, it's very important to talk directly with these teams and to see exactly what they're building from the inside.
Good. Charlie, dumb down blockchain technology if you can for the group here so they understand it, and then why do so many people feel it's going to be so disruptive in different industries?
Yeah, so the best way I've ever heard Bitcoin described to me is in 2008, Satoshi Nakamoto, whoever that was, solved an unsolved computer problem, and in so doing brought scarcity to the internet. So and that was a description from Olaf Carlson-Wade, a money manager in the space. So I think what you're going to see is, so I think the internet gave you a really cheap and efficient way to disseminate information and to communicate. I think blockchain technology gives you a really cheap and efficient way to show ownership of digital assets. And so I think there's the number of applications, I mean, that we've been going over, I mean, from title to tracking ownership in things like stocks, so like securities, and then delegating or I guess allocating computing resources. So there's a project called Filecoin that wants to take all of the memory, and then if you dedicate your computer to you know, store other people's memory in an encrypted fashion, then you get paid Filecoin. And if you want to store information on the internet, like in the cloud, then you use Filecoin to pay it. I think that those are really interesting, like, business models where you're creating markets out of things that weren't there. So that's
Good. Eric, why is the price so volatile in your view?
Well, I think the main, I come back to fundamentals, right? There's really no fundamental anchor yet in this space. And without any fundamental anchor, what do I mean by fundamental anchor? These are things like earnings and products and things that when we look at buying a stock, what are the fundamental things we're looking at? Cash flows, revenue. Those are really non-existent right now. Becoming a little bit in existence now with Bitcoin, because we're starting to see its value as an exchange. But I think that's the biggest problem, is that right now it's an emotional market. And as we know, what drives the markets? Fear and greed, right? We've all heard that 1,000 times if we've been to any investment seminar in our lives. And I think a lot of that you're going to see happening in this marketplace. The thing that's to be interesting to see is when liquidity tightens up in this market, what is it going to look like? And what effect is that going to have on the downside of those markets? That's the part that's a little scary, you know, in just jumping into it. But on the other hand, that's why I mentioned you do maybe 1 to 3% of your portfolio. It's because you know that, and you're willing to let that money go for a crazy ride, because this is venture capital back in the 40s, you know, and we're getting more and more information available to us to make smarter and smarter decisions in this, but we're so early in this process of who is going to survive, who's not going to survive, and what technologies are really going to come up to be incredibly disruptive in whatever space, and how are they going to survive the competition and everything else. We're so early in this, we just don't know a lot of that. So really, it's it's almost gambling in a lot of ways, honestly, because if you don't have fundamentals, what are you doing, right? If you don't have something solid to base your investment thesis on, then you're really basing it on a future aspiration or a future belief of what you think is going to happen. And there's some legitimacy to that belief, right? And that's why we're all here today talking about this, because we've seen the opportunities to grab onto this interesting opportunity, but how in the world do you do it is a question.
Stefan, you had.
Yeah, I think a good analogy tends to be art. So if you think about Bitcoin, kind of more like you think about a Picasso, right? If you look at the fundamentals of a Picasso, it's like what, $200 worth of paint or something, right? So it's really not worth anything inherently. So what drives the value is just the demand. And so that's why I believe we're seeing just such a huge amount of volatility, is because there's no fundamentals, just kind of inherently. Now, the fact that there is no fundamentals, by the way, is a great thing, right? The entire idea of Bitcoin is that it's decentralized. If there were to be fundamentals to it, it would ruin the whole idea. So it's this really weird, yeah, it's this really weird problem in the middle of like, the lack of fundamentals is why it is so successful, but now how do you value it? And so as time goes, I believe we'll see other currencies that will have an equal benefit and will be faster and better. And like Bitcoin right now burns as much energy as the country of Denmark does, right? That's not going to be particularly sustainable. So as new, better technologies come along, it's going to be like, oh, people now want to buy Renaissance painting, and the Picasso goes from being worth $100 million to being worth $1 million, right? So it really is driven by the demand of like, what will we use in the future? And the forecast of that. And I think that's why Bitcoin's been so successful. Just they're the early adopter that everybody knows. Right? You ask a regular person on the street, oh, what do you know about cryptocurrency? They're like, oh, Bitcoin, right? That's the only one. And so I believe that it's really heavily driven by just the knowledge of the brand. So I think the brand really has driven a lot of demand on that. If anybody agrees with me.
I think in terms of the fundamental value, you know, I do think there is a lot of fundamental value in something like Bitcoin, because when we look at the US dollar, I mean, it used to be backed by gold, but now the only thing left is the government who is giving it, you know, its value. There's nothing that's backing it up. So when we look at any currency around the world, you know, you have to look at what's that inherent or fundamental value of that currency. So I think there is a lot of value in having a decentralized global currency like Bitcoin and other cryptocurrencies. And in terms of energy, I mean, the production of gold is using over 10 times more energy than the production of Bitcoin. So I think that, you know, sometimes we focus on the amount of energy that Bitcoin is using, but to be able to send money anywhere around the world in seconds for a nominal fee at any time of the day or the year, I think is
Okay, there you exposed my stupidity again. What the hell is it? How's it using energy? Is that a question somebody else had? Okay, so I ask questions. I go, I don't know what you're talking about. So where's it using energy?
So the way that it works is that there is basically a ledger, a public ledger of all the transactions that are happening. This is sort of like the fundamentals of blockchain technology. There's a ledger and each transaction gets put in order. And there are computers around the world, a network of computers that are validating to make sure that every transaction that goes on there is valid. There's enough money in the place that it's going from and where it's going to. And there are basically a network of computers around the world that are validating this public distributed ledger. So each computer has a copy of the ledger on it. So for these computers to validate that the transactions are valid, they are doing these very complex algorithmic equations on their computers, and these are very powerful computers. For them to do these equations, to solve them and make sure that every transaction is valid, it uses a lot of energy for that computer to make sure that everything is valid. When they do validate the transaction and the block, so a list of transactions goes on a block, and then the blocks are put in order to make a chain. So that's what the blockchain is.
I understand now. Do you feel better informed today? I understand.
Do you
what
believe?
I believe. I'm betting the farm.
So once they validate it, they get a reward in Bitcoin. So that's where they spend all this money on energy, but at the end of it, if they validate that block, they get a reward in Bitcoin for the amount of money and time that they put into that.
Good.
So,
Eric.
so let me kind of put some sense to transfer money, because the first thing that comes to many of your minds, I would think, is, okay, so I wire $10 million to Europe in XRP, but XRP could move 15 to 20% in a day. Isn't that risky? And how's that done? So what happens, just to kind of walk you through what that transaction looked like, is there's dealers, or a dealer, that will represent on both sides of that transfer. They will buy the XRP on one end. 4 seconds later, the money hits here. They switch it back to the currency of whatever country it goes to immediately. That's how it's happening. It's not like it's sitting in that currency, in that cryptocurrency for but seconds. And therefore, that's why it's an efficient tool to be utilized. If you pull up Ripple, for instance, and look at their clients, it's pretty amazing who's on with them. American Express, a lot of the biggest banks in the world are on with this technology and are clients now of Ripple. So that's how it's solving that problem, because I'm sure a lot of you thought about it. It's like, how could I get money sent to me and leave it in Bitcoin where it can have such crazy swings of volatility where I might need that cash to operate my business or other things. So that's how it's happening. They're setting up dealers and the ability to move that to an established, less volatile currency.
Stefan, what's driving media coverage of crypto?
Well, I mean, especially with as much hype as there is, as the market has been growing, and you see that over the last, whatever, 2 months, right? The coverage now compared to December when everything was super hot, is just an absolute fraction, right? So I think whatever, like MSNBC suddenly had a Bitcoin ticker like constantly on the screen as it was going up. So all of that seems to have kind of gone away. So to some extent, obviously it's still big in the news. But so my guess is the next big news coverage. And it's interesting, the news coverage drives more demand, which drives the price up, which in turn drives more news coverage. So it's this kind of weird cycle that has been happening. And as things have kind of like receded on the pricing, we're definitely seeing the inverse too, is that as people are more like, as the news are more negative, now it's like the news are like, oh, it's up this much, but now the news is like, oh my God, it's down 15%. And everybody in crypto is like, okay, whatever, that's like a regular day, right? It's gonna go 15% tomorrow. But so it's funny to see how the news coverage shifts from being extremely like the positive news, and now it's mostly just the negative news, which I think is driving some of the decline in pricing too. Because, and like that was what we saw at Thanksgiving, right? Everybody went home, everybody had like a cousin that made $1 million and is now not a pool boy anymore. And then the next day there's this massive, or the next few weeks, there's this massive increase in pricing just because everyone's like, oh, I'll put in 10 grand, right? And because it's a limited supply, just there's more demand and the price went up. So the media coverage, I think, is just hugely important to what the pricing does.
So a very wise man years ago said to me, I think I was 30, so it was like half my life ago. He said to me, it's not what you see coming, it's what you don't know that's coming that is damaging to you. He was a famous guy in San Diego, one of the first billion-dollar companies in town. He said, it's the things you don't see coming that get you. So I'm going to ask Christopher, what keeps you awake at night? Because you're a brilliant young man. I've had the pleasure of meeting you many times. You're a brilliant young guy. What keeps you awake at night with this?
The markets itself, they never close, so.
Oh, so you don't sleep.
I think it's just, you know, I believe in the fundamental value and the sort of the ideals of like the blockchain technology and cryptocurrencies. I also try to keep, you know, the other side of, you know, this could, you know, potentially go to zero if some things go wrong, you know, in the development of this technology because we're so early. So, you know, I try to keep a balance between the two just to make sure that I'm not going too far in one direction. But I'm, you know, that's basically it. You know,
So, you know, I think we need to pay attention. How many of you have gone through a shopping mall lately? An older shopping mall, not a new one. Like UTC would be a good example. Any of you been to UTC lately? Have you noticed the change in what is there as compared to what used to be there? Did anybody think 10 years ago that if you bought a toy for your child, you'd buy it from Amazon and Toys R Us would be gone? Sears would be on its deathbed. I mean, all of these big retailers are, looking at what's going to be next. Nordstrom's trying to go private, probably one of the few remaining big retailers that does well. So I would have a question, and this is for Charlie. What about the criminal element side of this? And I'm talking about, there's a lot of, for example, I heard about ransom. Ransom is always in crypto, right? So talk about that in the banking world. How do you deal with that?
Yeah, absolutely. I mean, I think one of the largest reasons that you don't see the big banks coming into the space and willing to work with a lot of cryptocurrency companies, even the best established ones like Coinbase, is because there are risks around, anti-money laundering or money laundering. And also, for instance, when you send a bank wire, all of the beneficiaries are run through something called an OFAC list. Right now, there is no OFAC list in cryptocurrency, so you can send money and receive money from anybody, even if it's a known terrorist. So we, at Silvergate, we're incredibly careful with the clients that we work with, and we also have been very transparent with our regulators about the program we've built and just about making sure that we're doing everything we can to try and reduce the amount of money laundering that's possible in the system.
Because Silvergate's taken a big position, or at least a position in this, where most banks have not. So do you consider that you're progressive, you're seeing the next stage?
We were an early mover, right? So we got in 2013, and that was, at the time, we decided to dedicate resources, and we're in a position where we could dedicate resources to building this thing out, and it was a bet on the future that this thing would take off. And to the credit of Alan Lane, the CEO, and the folks that run Silvergate, they were right. And so that's why Silvergate is one of the main banking partners of cryptocurrency affiliated companies, because we were first. There will be other banks that get into the space. We're already starting to see it. It's just, it takes banks a while to build complete programs and then to really test the program and to get their regulators comfortable with it. And while there is definitely money laundering risks and things like that, there's also, as you can tell from what people have said on the panel, huge opportunities here for actual innovation of business, right?
By the way, I do want to just pass this on, because none of you probably pulled up a balance sheet on Silvergate. Silvergate is a very stable, high-growth, stable bank, correct? And I think you probably know that, right? So I do want to let you know they're not this high-risk renegade company.
One thing I'd add to that is those of you who have set up a crypto trading account, a few of you out there I saw raise your hand, you had to jump through a few hoops, didn't you? With passports and pictures next to your face and a number of things. So the industry itself is trying to attack this problem up front to obviously keep the regulators off their backs and out of their lives, because the last thing you want to do is get in bed with the government anywhere. And so they're doing what they can to try to alleviate a lot of that.
And I will just say about Silvergate, just as an outside perspective, they are our banking partner, and I will say industry-wide, they are the bank in the cryptocurrency space. They are number one, bar none, so they are definitely, to their credit, they were the first mover, and it has absolutely paid off.
Thank you. Appreciate it.
It wasn't even a paid commercial. So I have an insurance question for one of our esteemed members, Ross Afsadi of Gallagher. Ross, how's the insurance industry looking at this? Because I know you guys have terrorist insurance, you have hostage, computer. Is the insurance industry looking at this at all?
So this is being recorded?
Yes.
I don't know. Seriously, we've been asked the same question. Our CEO, Pat Gallagher, has answered this in a vague way because we really don't understand. So if there's an intermediary challenge for blockchain technology, the impact is unknown and yet very scary. What happens to the transactions in personal insurance, like auto insurance? What happens to the transactions of life insurance, and then on and on and on. So from a global risk standpoint, I think it's a big disruption around the corner. We just don't understand it. So that
But
was
you're
one
looking,
of my
but you are
questions.
looking at it.
We're definitely looking.
Okay. And your question was?
My question is, where do you see the impact of this technology in this platform, which is, we think it's the fuel that operates the global commerce. So what happens to that transaction of this commerce?
So in the insurance industry is actually really interesting. So, for example, a use case there, let's say car insurance, right? For example, Ethereum allows you to put executable code into the blockchain. So instead of just having an account saying, Stefan has $100, there can actually be a little program that runs into it. And so, for example, car insurance, right? What you could do is you could equip each car with 10 sensors, and you could say, automatically, if you wreck your car and the sensor says there whatever was 10 G's on the sensor, the car is totaled, you could have an immediate insurance payout just automatically processed, right? And the whole thing would be completely transparent. It could be a prepaid, et cetera. So there's some really, really interesting applications in the insurance space as well. And so I think that's where a lot of people are moving into. To the question of I think the insurance product that would be in high demand right now is D&O insurance, actually. Because, so as an executive of a company, here's the problem, right? On the regulatory side, it's not that we're not trying. We don't know what the rules are going to be yet. So for example, in my situation with the gold-backed coin, we don't know and we think we know, but there's no guarantees to any of this, right? Are we a commodity? Are we a security? Are we any of 100 other things, right? And if so, which regulations are we required to comply with? And until we see court cases that actually clear this up, we're just not going to know, right? So anybody doing really anything in the space does take a significant litigation risk. So, and if you're trading, that's different, right? But if you're doing an ICO or actually building a company in the space, right? The question is, well, is the SEC going to show up and indict me, right? And so that's where and again, you can do everything right, or you can try to do everything right, but it's interesting. Like lawyers at this point will tell you, we think this is it, but we're not going to give you a written opinion on it, right? You can't really get opinion letters on it. The SEC is not doing no action letters. So the D&O insurance space is really, and I know some people are trying to move into it because there's a lot of demand for it and people would pay a lot of money to be able to roll some of that risk off. But that's I think the insurance. So.
And I had a discussion with Troy Romero, our esteemed attorney, the other day, and he said, this is an interesting place to write the legal documents for, because you want to protect everybody, meaning, investors go into this, you've got to know this is a gamble, but there could be huge rewards. But what I would also say is, there was this company called Google and Apple and Amazon 20 years ago that if they told you what they were going to be doing and that you wouldn't go to a shopping center anymore, you'd have everything delivered to your door, I'd say you were crazy, right? Times have changed, and we've got to be at the, leading this versus following. So now I'm going to open all the questions to the audience. So if you will, and you have a question, please put up your hand. Yes, Chris.
So my concern is I actually love blockchain technology. I think it's the way of the future. My concern is when you talk about cryptocurrency is actually a legitimate currency and fundamentally as a currency. That's my concern because volatility is absolutely the worst thing that you could ever have from a currency. From a currency standpoint, you want stabilization. And I'll give you a real life example. So I actually had a Bitcoin poker website back in 2011. So, and we created it as a loophole because poker websites were banned in the United States. So people couldn't put money into banks and get into Bodog or all those different things. So we created it through Bitcoin. This is what happened when we created our Bitcoin poker website. Someone gives me $5 worth of Bitcoins. Overnight, the volatility would drop to $4, and then someone would try to cash out. Me as a service provider now got exposed because of the volatility of the currency. I went from being a service provider to investing into the probability of, is the Bitcoin going to go up, does it go down? And that's the reason why it kind of failed. And the reality is to say that these other companies are going to start receiving Bitcoin when there's massive volatility. We just talked about Venezuela as far as an inflation rate, 50% drop over a 3-month period, that's hyperinflation. Like, there's no justification I can see that this is a fundamental currency. From a speculative investment, that's exactly what you want. You want those high volatilities, and I commend you from a hedge fund standpoint. The only way that I see that the volatility reduces down is, one, it's very similar to the dot-com boom where you saw no fundamentals and prices increasing. It has to either blow up or it has to get regulated to the point where it stabilizes, and then you can actually justify it as a currency. That's what I see, and a lot of investors that talk to me about it. And so I just want to give it to a panel of experts of what you really feel like, how you can justify a fundamental currency when you know if I'm providing a service or product, tomorrow I might lose 30%.
So I think there are certain currencies that are working on having a stable price point, just like Stefan is working on, and there are other projects in the space. So there are some that are working on specifically having a stable value and price throughout. In terms of Bitcoin and other cryptocurrencies with the volatility, I think a part of it just has to come from realizing that the market cap of the entire space and Bitcoin individually is still so small that not much money is really taking it up or down, 10, 20, or 30%. So as it continues to grow, just from last year as a whole, we saw the space go from 1 billion to now we're around 300 billion. We're seeing the space continue to grow, and as we see the growth continue into the future, I think we'll see less volatility than we've seen in 2013, 2011. I can't even imagine the volatility at that point. But into the future, when we start getting into the trillions, I think that's when we'll see volatility on something like Bitcoin itself start to stabilize.
Would you argue that fundamentally to get to those trillions, we have to continue without fundamentals? It's a speculative. The only way you're going to get to $1 trillion is through the creation of speculation, not through the creation of fundamentals to reduce the volatility.
Yeah, I think we've talked quite a bit about that, and I think you're exactly right. I think the way the only way you bring stability at this point is the way I explained a few minutes ago, and that is having a dealer on each side of this that executes into a stable currency immediately upon the transfer, right?
But wouldn't that be considered just blockchain technology? If you're just, hey, I'm going to sell you Bitcoin, I'm going to immediately sell the Bitcoin to cash. Is that really?
That's utilizing.
Or is that just blockchain? Right?
That's blockchain. That's right. But yeah, and so it's more a medium of transfer in that scenario.
Right.
And so the only way you're going to find stability, though, is to find ways where you have a dealer on both sides that's going to be able to execute into a stable currency on each side of the transaction. Because you can't have it sitting there for even sometimes minutes.
Right.
I mean, you've got to have it executed and out of that particular block or that particular cryptocurrency immediately. Because you're using the blockchain, but the currency is what you're utilizing within the blockchain to make the transfer. And then there has to be an execution on the other side that's very quick. And I think that's what we're starting to see, right? We're seeing more people trying to find means by which you can have executing parties or party on both sides of that transfer so that you can do away with your very real problem, and that is hyperinflation. And your comparison to Venezuela is a very good one.
But a question for the panel. So large retailers, I've got a big voice. Large retailers, 3 years ago, how many large retailers accepted crypto, and how many large retailers? I mean, Amazon. Does anybody have a number now on large retailers that accept cryptocurrency?
I mean, Overstock is one that comes to mind. They've been accepting it for years, and they didn't sell, and it's paid off immensely for them in the long term. They weren't focused on selling it out right away to convert into the U.S. dollar. So we're seeing more and more retailers now, but it would have to at the moment with the current market cap, we would it would need to be sort of a longer term hold than sort of like a fundamental foundational part of a business.
Questions?
So,
Yes,
sorry, wait,
John.
can I
I'm
follow
sorry,
up?
yes.
So on the stability, so I think we will start seeing a ton of innovation around that problem. This has not been a problem that has been particularly attractive to solve, simply because people have been raising hundreds of millions of dollars doing ICOs. So I think the smartest minds in the space have not been focused around this problem just because the huge rise in prices have usually been really helpful. I think there's a whole bunch of projects in that space that will be addressing this. That's again why I'm not as bullish as, for example, on Bitcoin, because I don't believe Bitcoin itself will be able to innovate into a space where it'll become stable. I think it could take years, and then maybe Bitcoin becomes the new gold in 20 years because it's very scarce. I don't see it getting stable. The demand side problem is just too huge. But I think people will introduce new currencies that will solve that problem.
And even if you don't, I mean, stable coins is ultimately where everybody wants to get to, but I think you'll also find there will be hedging mechanisms, right? So like the airline industry, you could say could live and die on the price of oil, right? And so, but now they have a way to have futures contracts to try and stabilize and understand what the expectation is going to be on the cost of one of their, primary inputs. And I think you're going to start to see more mechanisms around hedging things like Bitcoin for retailers who want to use it as a means of payment.
Also, you're kind of comparing like 1999 internet stocks to like, right? That's kind of the comparison. Like it's like nobody even was talking about this a year ago. So for the expectation to go from zero to, I mean, it's been just growing incredibly fast. For it to grow and get stable in that time frame, just like it's going to get stable at some point through innovation and through people knowing about it. So I think the problem will kind of at least get smaller over time. But it's
John Burroughs, next question.
Oh, sorry.
So I'm trying to make sure I understand, and when you talk about retailers and people accepting Bitcoin or whatever kind of cryptocurrency, and this is the first time I've heard that it goes from the crypto to a currency value versus, say, a retailer that's selling coffee for whatever amount of Bitcoin, does their price per cup of coffee change as the volatility goes, or is it the same, or how does that work when they say they accept Bitcoin?
Yeah, so I think the Overstock's a great example. So obviously it's a very small percentage of their sales that's happening with Bitcoin. And so when they sit down as a management team and they're putting together their financials, they're allocating some risk capital towards keeping that in that currency. And it's paid off, very handsomely. So any retailer who is taking a coin as payment is either A, going to convert it to whatever dollar nomination they're going to, or they're going to allocate a certain percentage of whatever that is of their total revenue or net income towards keeping that as a risk investment for the company, if that makes sense. So you'll probably see both on those, on the realm of.
How do they declare that as revenue when they receive it, I guess, like for your income statements and things like that? It's, you do it as that.
Is there an accountant in the room?
It's when you
Yeah.
convert it.
So
Well, no, if you get paid.
no, it'd be when you receive it, but the question is then at what value would it be? I think it'd be the value of whatever you sold the good for.
Or maybe
Well, it'd
this
be
is a
similar to
tax
forex,
loophole.
right?
It could be.
So realistically, the price for the coffee would be quoted in US dollars for the foreseeable future. Now, if you show up and say, hey, can I pay in Bitcoin? They say yes. Literally, you've taken the Bitcoin price risk. You're sending it to them. They'll immediately exchange it. They will carry zero price risk. Like there's nobody that sells coffee is realistically going to take that price risk, and it's going to just be all quoted that way.
Back in the, next to Brian. Yes, sir.
Thank you for the information, very helpful. A few of you have brought up as far as title insurance. My question, let me take a step back. I'm in the title business. I own an escrow company here locally in San Diego. There's a company called fraught in San Francisco. Maybe some of you have heard that they've been doing some testing in Vermont without title insurance on cash real estate transactions and using blockchain technology to handle those type of transactions. As far as being an intermediary as part of my business, I'm looking into that and figuring out how we can be an early adopter to not be wiped out. What advice, suggestions do you have to either use the blockchain technology or adapting it, create our own software? What are your thoughts behind that? Because a couple of you brought up title insurance.
So especially, okay, titles I think will take a long time to switch over to crypto, right? Like realistically, the government is not going to say tomorrow, oh, let's switch them all over. And even if they do, it's going to take them 5-10 years to actually do it. So I think you should start thinking of it, but I'm not sure there's a massive urgency. Now in your space specifically though, because you're insuring the thing that will be entirely resolved with blockchain, I'm not sure how much application would be on the insurance side, because if the insurance becomes not necessary due to the use of crypto or of the blockchain, that seems like a risky position to be in. So I'm not sure if you could build tech to resolve that, because the problem kind of goes away, right?
David Susi.
Yeah, I know that I'm just a crusty old baby boomer. And I know that change is supposed to be really cool, but, you know, all of us in this world, well, first of all, the US dollar is the gold standard around the world, right? I mean, not gold back, but gold standard. I've been fortunate enough to travel the world. I've been to Argentina, as you have, Vietnam, Europe, Thailand, Indonesia, China, and everybody accepts the dollar. Sometimes they prefer the dollar. And everybody in this room has worked to succeed based on the dollar, right? So my question is, why? Is this just an attempt to undermine the successful capitalist society that we live in by those that are anti-capitalist?
Great question.
Love the question.
Boom. Drop the mic. Who wants to take that one? You know what? I want our banker. Yeah,
I deal with a lot of people that are very successful in cryptocurrency. They are capitalists. They are very much capitalists. If anything, I would say that, yeah, cryptocurrency, I don't see Bitcoin undermining the US dollar, right? That's the short answer. I think when you look at what makes a currency, there are three things that we hear a lot. It's a medium of exchange, so you'll accept US dollars. There's a unit of account, so when we do our income statements, we do them in US dollars. And then there's a store of value. You go to sleep at night being okay that there's money in your bank account because you know it's not going to go way down, right? So I think when you look at Bitcoin specifically, it's it seems like it's really gotten down the store of value where people are willing to use it as a hedge. And that's where I brought up the term digital gold. So it's like, there's only so much that's ever going to be out there, and you can invest a little bit in Bitcoin, and then if something happens with the economy or the stock market goes way down, it should be a hedge against the other things in the economy, right? So I see Bitcoin succeeding as digital gold. I don't see it replacing the US dollar because we're not going to start doing balance sheets in Bitcoin, right? And so that's my personal position on it.
Sure. Christopher.
So we are capitalists in the space. We're not so idealistic, but what I would say is that, one, the US dollar has changed over time, being backed by gold and then not being backed by gold. Currency has changed over time. It used to be gold coins, it used to be, paper bills. I mean, currency has changed throughout history. But with a technology that is developing, that is helping to revolutionize the way that we transfer value, or the way that the internet has really revolutionized the way that we work, operate, and live, I don't think the people who were developing the email protocol were really concerned about the post office. They're pushing forward. And whatever happens and how the chips fall, that's up to the market. But we're not trying to undermine the US dollar or, take over governments. It's just pushing forward and making things easier for individuals around the world.
Good. Stephen Kroll.
Somebody just explain the difference between crypto mining and then investing in crypto?
You're the only smart one up here.
Yeah, exactly. Well, it's your space.
You know what? Let's let the banker do it.
The way I think about it is the miners are like the auditors of the system. They're trying to make sure everything's legitimate, all the transactions. They get paid a small fee for that. Investing cryptocurrency means signing up for a Coinbase account and taking $500 and putting a bet on Bitcoin and expecting it to go up in value in the foreseeable future.
To answer your question?
Yeah, you need both for this whole thing to...
No. So something to so the users of cryptocurrency, you can use it. The miners are they're, like I said, the auditors. You don't have to be be functioning as a miner in order to use it. You can buy cryptocurrency, you can send it, and never have to be a miner.
So the miners are the network of computers around the world that are using electricity to validate the transactions on the blockchain. So they are using electricity, they're paying for electricity, and then when they validate the transactions, they get rewarded in Bitcoin. So that's mining. Investing is, just like Charlie said, you are just purchasing it directly through Coinbase or an exchange.
Christy Norton, next. Oh, I'm sorry, Stefan first
Just
and then
quick, I would
Christy.
say ballpark, if you're putting in less than like $1 million, just buy crypto. Don't do mining. Like mining has become incredibly capital intensive and is super risky. Not that buying isn't, but like it's a whole specialization that you probably don't want to get into.
Well, and it's very complex.
Yeah, it's not an easy thing to do.
Christy,
It's been mentioned a few times, and I think there are probably people in the room who would like to understand why there is a limited number of Bitcoins that can ever be mined.
Eric.
Well, part of it is they're trying to control somewhat it's kind of, I guess the best example would be controlling the float of a company. So if a company is going to issue 1 million shares of stock and they actually have approved 5 million, the million they issue is what's called the float. And by issuing the float, that's what's trading in the marketplace, and that's what is determining the price, is just those 1 million shares. And so by controlling the float, you're trying to have an impact on the supply, which therefore when the supply and demand things that we've talked about up here kick into place, that's going to impact the price of that particular currency. So they're making it scarce to help on the supply demand side. Does that make sense? Just like a company would issuing stock and controlling the flow. I don't know if you guys would say it any other way.
So Satoshi basically in 2008 decided it was going to be 21 million. So it was I think a somewhat arbitrary decision just because the number sounded good. And we don't even know who the guy is. So that's kind of all conjecture. But the key part is it can never be changed. Like no matter what happens, even the network, it cannot change. So you have a mathematical certainty that it will never be more than 21 million. So the scarcity is therefore ensured. That's really the key part, is there can be no more issuance.
Brett Schoen.
1998, 99, I heard a panel like this, and it sounds very familiar. On it was a Microsoft executive who said at that time, at Microsoft we play a game, name dead computer company. He goes, and in a few years we'll be sitting around playing another game, name dead internet company. Who do you guys think is going to be the dead cryptocurrency?
Now there's the golden question, right?
And if you knew, would you tell?
My only take on this, because I'm more on the fundamental side. You guys have got to realize we invested in Ripple very early before I even knew about XRP, and we've already through the secondary market got all our money back plus a return and have 93% of our money riding on the rest of it. So we're already covered, right? And our clients are already covered in their investments, and that's the way we look at it. So I would say this, is that the more disruption you can see within a major sector of the economy and that coin playing a part in that disruption gives you a better chance of succeeding. I don't know if you guys would add anything to that.
Yeah, I would just say hire the experts and let them do it. You know, the cryptocurrency hedge funds. If you're going to invest a substantial amount of money into the space, you should probably have an expert managing the money, I would say.
I'll take an actual shot at it and say Tether will be dead in like 5 years.
Okay, you're next. And then,
Yes,
Seems like an easy one.
way underneath everything here, who would be building the computers? Who would be invested in building these computers that are doing that?
great question.
For the mining, is that what you're asking, for the crypto mining?
For the power.
Yeah, it's the ones building the mining computers. They're called ASICs. It's incredibly centralized. There's 2 companies out there that really control like 90% of all of the new miners being manufactured, and that's Bitmain, which is a Chinese company, and then there's another one called Bitfury. Those are the 2 companies. Those are both privately held companies. As far as some other cryptocurrencies, that some of them are using GPUs. And as a result, you've seen a rise in the stock of the two companies that control 90% of the GPU market, and that's AMD, and then NVIDIA is the largest GPU manufacturer.
And where are they?
NVIDIA is based out of San Francisco, and they're publicly held. Both the AMD and NVIDIA are both publicly held, so you can look at it.
I just want to clarify the question. You wanted to know how to invest in mining?
Well, just invest
In the technology
in
companies.
platform.
So, I mean, the ones that are building these platforms are the teams behind the cryptocurrencies. There are teams of developers behind each cryptocurrency.
He's talking about the boxes.
Okay.
Yeah.
Be careful with NVIDIA. So it sounds like there's about to be ASIC miners for Ethereum come to the market pretty soon, which would make the GPUs obsolete.
Nick,
So
you're up.
That's a big gamble too.
I'm loving the idea of tokenizing any asset. I think that's great. But why is something like an Ambrosis or something like one of those companies who develops, they're basically using blockchain technology to track food and drugs through the UN for third world countries. What is the point in them having a coin?
So I think these coins really are going to the underlying blockchain technology to keep account of and to be able to track the food from the origin to where it's intended to go, and making sure that it's being accountable along the way. The UN has been using blockchain technology, but it's not a token that we can all go in and invest in and hope that it goes up in a year. It's a private blockchain that you don't necessarily invest. It's not open to the public. It's a private blockchain, but it's for the use case of the accountability and making sure that their efforts are reaching their end instead of sending money to a third world country and hoping that whoever receives it does something good with it.
So is the coin specifically to raise the money though?
Yeah.
Is that the whole
So
point?
I think one of the big dangers that's recently been happening is lots of people came up with lots of coins for the specific purpose of just raising money. Like the coin will never do anything, and so that's where a lot of the risk comes from in this space. And I sound very pessimistic on a lot of these. I'm really not. I think blockchain will be huge. There's so much stuff where there's just a lot of people who are like, oh, I can raise $200 million? Yes, please, right? And then you come up with a use case, you put together an amazing team, you market the shit out of it, you get $200 million, and I think we'll see a lot of kind of walkaways where people just steal the money. So I think that's one of the huge dangers.
Rodolfo.
So I've heard a lot today, and it's giving me flashbacks of the dot-com bust. And so I'm just interested in understanding, you talked a lot about like this cryptocurrency, and I heard people worried about the dollar, but I think it's not really necessarily what it's all about, right? It's more about replacing banks, really. And so maybe shorting banks is where it's at, or
We're not publicly held, so it's okay.
I'm not sure what, or investing in electricity, or, how do you invest in blockchain technology? Where, if I wanted just to go after the intellectual property, or what, companies are you developing blockchain? What are those?
So I'll go to our investment advisor for that question.
Well, trust me, we don't spend a lot of time advising clients on cryptocurrency. Our clients have already knocked it out of the park, and we're preserving and growing capital. And that's our role in this whole thing, but we do see a lot, and we do talk to a lot of people that are in the middle of it. So that's part of why you're seeing so many ICOs, right? Is people coming up with what they're saying is going to be disruptive technology. The challenge you have, and I just happened to be in a hotel room 2 nights ago watching some program, and it happened to be on cryptocurrency, and they had a panel of experts in that, and they said, well, what percentage of the cryptocurrencies do you believe will be in business in 5 to 10 years? And they all agreed it's going to be less than 10% or 7%. So with that being said, like I mentioned a minute ago, if you're going to invest, you really want to focus on a technology that is going to be disruptive in a very large economy of opportunity. And it would be the same as if you're investing in biotech. I used that as an example earlier because biotech is very hard to get your head around, and then to be able to see the end of what biotech is going to mean. And so for you to be able to find other ways to invest in it, other than just jumping in and buying the stock of a biotech company is, finding ways of providers to services to that particular industry, which is some of the questions we heard out here from some of you, which is a very smart way to think from my point of view, with an investment area that in a large point is kind of a crapshoot. Now, the advantage is if you happen to grab one, how many, this is kind of the old venture capital model, right? How many great venture capital companies do you have to own? If you own 10 of them, even the very best in venture capital, which is very early investing in private companies, what percentage do they expect to knock it out of the park when they're making that investment? One, maybe, to knock it out of the park, and maybe two others to do okay. And they make lots of money with that bet. You kind of have to approach this investing with that very same mentality. Is how do I diversify amongst the options if you're really hell-bent on taking your 1 to 3% of your portfolio and diversifying it into this? How do I diversify it out? And that's why I come back to, you're probably not going to do near as good a job as some of these funds.
Yeah. So a hedge fund.
With experts that are looking at all this stuff.
So I apologize. So we allotted an hour and a half for this, and to me, it's like, we microwaved this. It's like, wow, is my watch right? Crap. So we begin and end on time all the time. So two things I want to do. I apologize I can't answer any more questions, this esteemed panel. By the way, you all made me look really good today. So, because I know nothing about this, and so thank you so much to Stefan, to Eric, to Christopher and Charlie. You guys were amazing. I want to thank our audience for attending. Now, I want to ask a favor. We have our sponsors and our SAGE chairs that are going to meet in this room after. So I know we're going to be dispersing, you're going to be meeting. Now, our administrative manager, Chuck, will send out to all of you, because you've got some really great resources here, contact information for any of these people that are actually in the business or in a business. So we've got a bank. I don't think Stefan's selling anything right now. But
I'm
future.
selling coins at some point.
Coins. So Eric, if you have $5 to $100 million to invest, Eric would love to meet with you, or you're selling your company in the future. This gentleman runs, I call it the mutual fund for, I invested back in 1999 in 10 companies, and 3 of them came through and made me a lot of money. So if you can, find a good hedge fund, that's a good suggestion. And then our esteemed banker, you're not like a normal banker. You actually have a personality. This is amazing. So did you stand them in for somebody or something? So I want to thank you. So again, other than sponsors and SAGE chairs, I'm going to ask you to migrate out, if you will. Thank you.